First up, let's connect with the management of AU Small Finance. Sanjay Agarwal, MD and CEO of AU Small Finance, joins us now on the show. Well, the profit after tax has risen. The asset quality has as well improved on a sequential basis. Reported NII is up 43%. So clearly, Mr. Agarwal, it may not have been that bad a quarter for you. Tell us what exactly went by in the March quarter that led to a 43% jump in NII and that increase in the profit after tax as well.
Yeah, thank you so much for this. I hope everybody around you and yourself is safe and healthy. So, over the whole 4 quarters, you would have seen that, AU was performing very well in all front, whether it was asset growth, asset quality, deposit liquidity profile, everything, right? The entire metrics was taking to the core. And lockdown only happened in the last 7-8 days, so we had our own impact, but largely the whole year was secured around our own operational management. So I think the credit goes to entire team, and of course the way the whole our customer base and the environment played for us, right?
Okay. Now, there was a provisions for COVID-19 which has come in at 138 crore rupees. Tell us, is this is of course for the month of March. We had April as well, which has gone by. How have your collections essentially been impacted because of the lockdown?
Yeah. Okay, so what happened, because you have to see that, as on March 31st, our book is around 27,000 crores on balance sheet. Out of that, roughly 20,000 crores were in normal, there was no default as of 1st March. So before 1st March, whatever profile we had, around 2,500 crores of default account, which was from 1 to 89 DPDs. There we have created a 5% COVID-related provision, which is as per RBI. Total we have to create 10%. So 5% will create in next quarter, this present quarter. So otherwise, in our current bucket, the most encouraging number is in current bucket, where people had the option not to pay us, but 75% people has paid us in the month of April, right? And that too, around 52% as people has paid us fully, and 23% people has paid us partially. So I think you have to see the whole narrative around people's ability and people's capability to pay us, right? Those people who have not opted out to not to pay, not because they were not capable enough, right? Because there is some anxiety. There was a complete lockdown for 40 days. And people really want to conserve their cash. So there were blah, blah things, which made people realize that they can opt out not to pay. So in my opinion, as we move forward, and as today is the first day of relaxed lockdown, I would see that a lot of economic activity go up, and our businesses more around the local services, local trade, local happening around them. So in my opinion, from here onwards, I believe that our asset quality will now get more improved rather than going downwards.
Okay, that's definitely quite good to hear. What about asset quality for SMEs and MSMEs? If you could just talk to us about that segment.
So our MSME and SMEs are not generally manufacturers. Our SMEs and MSMEs are more traders. They are around local businesses, local activity, local economy around them. So in that segment, and they don't carry high capital intensive requirement. They actually work on small wage bill, small utility. So once the lockdown open up, I think those businesses will come sharply back to the normal. And our 65% portfolio is also around semi-urban rural areas. So those areas are less impacted because of COVID. So I think in next maybe 3 to 4 weeks, we'll see a lot of happening in those areas and those businesses. And then I believe that our MSME and SME segment will also perform better than what we have seen in last April.
Okay, all right. You recently, you of course had that board meeting also for the QIP fundraise. If you could tell us, what's the amount that has been approved? I understand it's roughly about 2,500 crore rupees. So, could you tell us about the capital raising and the mode of capital raising?
Yeah, so that is only an enabling resolution, and we have a capital adequacy of around 22%. With tier 1 18% plus, and as of now we are not looking to grow our balance sheet. We are actually looking to more have a sustainable business this year. So this is more to have that comfort and that enabling environment internally. So that is why we have taken the enabling resolution. But as we move forward, we'll take the situation as and when it comes to us, and we do have one more investment in Awas of 7%, so we can actually look for that to also monetize. So it will depend on the situation as it comes in.
If you had a dog, he would totally jump.
All right. Okay. Just want to understand what's the financial sector situation right now. I also understand that there was a meeting recently held where the RBI governor spoke to the heads of a lot of banks. What's the situation right now when it comes to stability over the financial sector, and also most importantly flow of credit to businesses? I mean, we do know that the recent TLTROs as well conducted by the RBI, one of them went through, but then the other one, which was directed towards businesses where credit quality was perhaps a little lower, where credit rating, was a bit lower than AAA, that demand really did not come through. It saw extremely few auctions. So if you could talk to us about credit flow to businesses and industries from banks.
So of course, I will start with one narrative that there is ample liquidity with every bank. So RBI has given us a lot of money, honestly, with a lot of other sources, but there's a refinance institutions like NABARD, SIDBI, NHB, Mudra, and of course they're also pushing a lot of money through different TLTRO schemes. So liquidity is not a challenge. Of course, there was a complete lockdown for 40 days. So customer was not coming to the banks itself, right? So I would say banks are, and I'm telling as my own institution that we are ready to support banks' customer needs, and today is the first day, and I believe in next 3 to 4 weeks, we'll see a lot of inquiries coming back to us. And of course, our focus will be to more to our own customers, because as you know, our 98% customers were below 90 days as on 31st March. So I don't think that there is any reason to doubt their capabilities and their intention. So if my customer is good and he has the intention to pay us, and because of this all COVID issues he's in trouble, I would rather go and help them out, right? Because that's all banking means. So I think we will be there to support our customers for any credit needs. Liquidity is ample, and I'm very happy and thankful for that we are coming under RBI's umbrella, and they are really watching us so close. And I was not privy of the meeting with RBI, what you're talking about, so I can't comment on those discussion and developments.
Okay, fair enough. Thank you so much, sir, for joining us today, Mr. Agarwal, and quite positive commentary as well, especially on the asset quality front, which I think at this point of time is a key fear when it comes to the banking sector. Guidance for asset quality is positive, not much deterioration expected, and 75% of AU's customers have paid in April. They have not opted for availing the moratorium, plus ample liquidity in the system as well. That's AU Small Finance for you.